Hello guys, glad to have you on board again. Today we're going to try uncovering the major question I've been receiving over the 24 hours regarding the huge distortions we have between cryptos and especially Bitcoin versus Ethereum. People questioning if Ethereum will really finalize its breakup or it will just fake it and cause a massive retraction and contraction out of global recent moves. So we've seen Bitcoin surging and breaking through resistances. I'm going to just go daily charts so you guys see this one a lot more clearly. So Bitcoin has been clearly breaking above every channel. The short-term channel has been broken up, and as you can see, this is the cluster area that we highlighted in the Ethereum as well. The same cluster. So we've broke up this cluster in terms of Bitcoins in here with a 4,600 area been clearly broken and closed above for a significant number of days. It's been two days closing on top of this. Yesterday is an upper shadow candle, so obviously the bears are crying out there saying this is about to reverse. Not necessarily. That doesn't mean an upper shadow candle means the bears have it in control. But in terms of Ethereum, yes, it is a little bit more concerning because in the Bitcoins, you don't even give a shit about that. Look at this. We're clearly breaking that shit up. You're definitely fucking up the trend channel. So there is not even a question what happens in here and now on Bitcoins. It's not a pullback. It's not a bearish information. There's absolutely nothing to price out of here. Just look at the goddamn momentum. We're as high as it's ever been. There is absolutely no pullback in there, no bearish signal. We fucked up all the bearish trend signals. All those divergences are the one the bears would have traded and took over if the market was bearish. So if you think we're going to go making new lows, as I said yesterday, it is still possible, but it will require highly important news flow, which means it has to be something else than technicals that brings us to new lows. And if they do, I think it will be very short term. So getting in there might be just a lower shadow, kind of fucking up whoever is stupid enough to put some market orders in the books. But aside from the risks, normally you should already know about this one. It was yesterday's topic, so I'm not going to just do it all over again. What we have today is the question rising on top of why is Bitcoin breaking through this cluster as Ethereum seems to be lagging and hasn't yet even got to this cluster. First of all, we need to understand the most important scenarios in here. In terms of technicals retracement, meaning if we clearly finalized the trends, the bear trends on cryptos, which I believe we did regarding the signals I have in front of me, normally we should target retracement level on top of technical levels, which means instead of searching for previous supports, searching for resistance, all right, we're most likely going to search breaking previous resistance by targeting fib retracements. So the 14.6, which is normally a technical minimum to say we've neutralized something, which is what we actually do. We're more likely neutralizing bearish trends more than really assessing their over or anything like that. So we're putting them a neutrality stance. Let's have a look at this as well, because I've seen many people showing this, and I think this is not uninteresting as, either. I would say if we do use this and put a 61% fib, it will be kind of interesting at some point, because I saw some people making this comparison, and I didn't really thought it was stupid. So I would say this area, 6,500, the 61% retracement is an area where bears would probably like to trade. So I will hope for the prices not to reverse in this specific price, but try to somehow show some reaction and breaking a bit through this. But first of all, my targets are in here. I hope the price may go higher than that. We'll just be even more positive. But for now, I think Bitcoins and Ethereum shouldn't be targeting more than this 14.6. At least reaching out this target, you should start pulling away from the market. Not getting entirely out, absolutely not. Just partial profit taking to lock on the previous gains and making sure that you have some available cash if market is about to pull back afterwards, which I think is going to be very likely. So, same old question. Why don't we break in here? First of all, the scenario ends when everybody reaches out the target area. So if for some reasons Bitcoins were about to overcome the 14.6 and reach out to the 61% area, if we were about to go there, all right, then there's still a lot of room to go, a lot of prices to go to the upside. And moreover, when you have correlated assets, which means they move up together throughout the bullish cycle, they move down together as well when the bearish cycle plays their games. What we see in here is that both cases, we fucked up bearish cycles, all right? Look at the sine wave. Is acting irrational. You're showing some breakouts. So it is definitely signaling that we fucked up the bears. That doesn't mean that we won't reverse, because some people tend to believe that we broke up for bad reason, that it's been a stop hunting. So it is possible. But once again, does that really require a trading activity? Do you need to press buttons because of that information? I teach you guys to trade only based on reliable technical information and to forget about all the subjective informations like maybe this was just a trap because some people may have figured out some problems in the order books or something like that. Let them talk. Who knows? You don't. So all you know is what your indicators show you, what the technicals show you. And right now, all I can see is that for Bitcoins, there's not even a question. We broke through the trend channel. You don't sell something like that. You just let it go. Next time, by the end of that week, we're going to have a broken up trend channel. That doesn't mean the market may not consolidate for a bit, for a few weeks. It all just says that the move and the trend and short term has now reversed bullish, and that so should you. So every time frame lower than the daily has to be traded bullish until further notice, and there is absolutely not a goddamn clue that this is about to reverse. All right. Now, question about Ethereum, because in the Ethereum, the picture is pretty much different. In here, we're trading 164, and we've been potentially rejecting out of the trend channel. And in that perspective, there, we would have a significant distortion between Bitcoins and Ethereum. Because if we were about to reverse, all right, that would mean Bitcoin has absolutely no problem breaking through resistances and increasing market cap significantly, but Ethereum does have a struggle. In that perspective, is going to be dangerous because you know the most speculative one of those two is definitely Ethereum. This is where the volumes are more speculative. Therefore, this is where we should have the highest level of volatility. So what I see in here is different. But once again, if you make the story before you read it all, this is where it gets really dangerous, because once and for all, the story is pretty much far from being over. We're still in a bullish cycle. The question is whether this bullish cycle is already to its end or if it still has some gas to push through. We can go sideways in here. I'm going to give you multiple options of prices, because people tend to forecast that, oh my God, I'm so much fearing that this is going to happen. Well, if this happens, who gives a shit? The stop is there, which means normally if prices get to go there, normally they will find some support in here. If they don't, all right, then you trigger the stop loss and you'll lose nothing. You just get out with no gains. And then you'll say, oh, that's stupid. I could have gained so much and I just lost it all. No, you didn't lose anything. You just lost a speculative trade and not even a loss in capital, all right? So that's not a bad thing. But when you put your targets to be there, why the fuck would you even trade this area, as there is absolutely no clue? All you have in here is a gray signal out of the fucking trend channel. You shouldn't even care about that. Moreover, Bitcoin has been fucking up with this trend channel. I very well expect Ethereum will do as well. It's just these assets are correlated. As long as the bullish cycle plays its game to the upside, let it go. If it actually reverses, then this is where you're going to have to worry about Ethereum and eventually trigger some stop loss or partial profit taking. But in my personal opinion, as I am high risk taking kind of trader, I most likely want to project myself to the gain and get my entire position up to this price rather than taking 50% off the table just right now and probably dividing by 2 the overall gains I could make just to make a short profit right now. No, I'm not caring about that. I don't want tiny profits. I'd rather like to be proven wrong and take no loss but lose it all, lose my gains, than just assessing a risk that has absolutely no reason to be as for now. All right, all I could do right now is just say, okay, maybe the breakout area is a little bit under danger for now in the Ethereums, because you always break a trend line. All right, we've been pulled back into this trend line yesterday, and so far we're still holding on top of this. All right, so this is the trend line we've been breaking, or this one if you figured out this to be a market top. I don't nearly think it was, but all right, let's say, all right, say this trend line. No, we don't. I mean, to be honest, this one is the good one. Let's put Ethereum in a big screen, in plain screen. So why you shouldn't even be worried at the current time. So first of all, we've been pullbacking, and so far it's holding. Even though we've been making a doji candle, that's been triggering a gray signal. Since when does gray signal matter unless you're trading horizontal level? So we do trade horizontal level, which is that previous bottom. So if your low risk profile, you're really fearing something bad may happen, just take 25% profits and let it go with the rest of it. Put the stop at break even and let the price work its damn job. Otherwise, anything you do in here is just limiting the gains, and it's as stupid as letting go with the losses. These are the natural beginner's bias. Cut down the gains and let it go with the losses, and that's definitely not how you do. You need to learn how to let go when it goes well. We were expecting that bullish breakout. It happens. Why the fuck would you reverse just after it? I don't get it. I don't understand why you do such thing. All I can tell is that this may be brutal, and you might be wondering why the hell are we pulling back so strong, as Phil said we're so strongly bullish and we're going to break the 200s and everything like that. Is this showing any signs of bearishness? No, it isn't. All I can see is that we now have stop losses set, and if we go down this price with candle close, this is where you can start worrying. But what it says is that we're probably going to range in here on top of the previous fucking resistances, and as we range, we're probably going to have another bullish cycle. And let me tell you something, you know how Ethereum is pricing in, as this one is the most fucking speculative one. And you know how speculators are pricing in this goddamn crypto sector. They go parabolic wave 5. So what if Ethereum was about to do its final stages, straight line, breaking this area without even consolidating, which means Ethereum will accumulate in here, all right? What is an accumulation? All right, how does that look like? So the breakout hasn't been happening yet. It didn't because we should have broken both the trend line and the context, and for now we might be rejecting the context. But do you see a goddamn signal? There is nothing suggesting we're reversing in here, but we could be doing the accumulation in there. Remember that Bitcoin has been accumulating below its resistance, and where Ethereum we're still trading neutral areas. So it might just be a goddamn delay. All right, and I'm going to give you additional information suggesting this is probably just that, a timing delay for Ethereum that will probably catch up on its little bit on Big Brother afterwards in a stronger perspective. So what I have in here doesn't even concern me. All I care about is for us to maintain and reject bullish anytime we try to pull back out of this trend channel. And it's just going to be the goddamn accumulation phase preceding a breakout. So I think the Ethereum's breakout might be to come until as long as we maintain prices oscillating and rejecting bullish anytime it will try testing the context the trend channel. So all you should actually care about is to be the 1 hour support context to maintain prices to the bull side, which they done so fucking far. So as long as this plays its game like that, there's nothing you should even worry about. All right, so if you absolutely fear the market to reverse, then have a look at the goddamn 1 hour chart, and as long as you don't break the previous thing, I mean, you're fine. So put an alert in there, all right? And every fucking day you come rising this alert, all right? So you set it below the previous context box. Go there, put an alert, and you say Ethereum problem, all right? That doesn't mean you have to get the fuck out. It just means something isn't going according to my plan. All right? You said that. You put an alert in there. All right? When this day will be over, we're going to have a new box. You rise this on top of the previous box and in here. All right? Let's do this shit. Let's do this instead of being crazy fucking fearing anything. All right? As long as we play according to this, man, look at the boxes. Is this even bearish? No, it isn't. So far, we have some bullish prices. Don't be fearing anything. Just let it go. Wait for the range to build up. Wait for the context boxes to fold each other again to show up this range is taking place. And then I'll probably trade the breakup of this range. I told you to avoid trading the breakout of Ethereum a few days ago. This is one of the reasons why. And as you can see, people are not trading the breakup in here, probably because so much speculators are profit taking right now. Speculators with short sight who's been buying this area, just taking a 25% and saying, okay, that's enough, I'm getting out. So they're just asking for their money because they've been short-term speculating. It's good, but I still tend to believe that we've got far more people in the Ethereum valuation who are speculating for a longer perspective. Those who bought in here, I don't nearly think they're profit-taking in there. All I think instead is that in here we've got far less speculators, we've got far more short-term speculators, profit-taking, those who've been accumulating their prices. So maybe I should take my profit as well, maybe you should as well, and as I said, 25%, I'm totally okay. You do have a signal that allows you to press the buttons, but no more than just locking on the gains buttons, certainly not getting the hell out and taking your entire profits. If you do this, you really don't get it on how the strategy works, because everything suggests we might just range in here for a bit, accumulating for a potential breakout. Of course, these informations will have to be validated in the forthcoming days, but now we're going to have a look at another perspective throughout the spread chart, ETH-BTC, all right, to let you understand how this plays at the moment. We can clearly see that we've been clearly breaking a resistance in here, and as you can see, it is a big range. So we've been supporting in here the Ethereum's Bitcoin spread chart, showing that in the near future, normally we have more decent odds to go to the upside in here, searching for the resistant context of this range and normally breaking it, as we did break the resistance support, the context support previously. So normally we're going to get in here and rise again, consolidate and get. All right, so this is something like that is expectable. A bullish cycle, consolidation near the mid area, and then normally a final push for Ethereum before the correlation reverses once again. So now the short-term price structure in here, we've been supporting prices with a signal in here. So we rose, broke a resistance. Okay, let's push back what's been happening in history. So we broke resistance after building a support with a signal in a supportive area. We've been fucking up the trend channel, but now we're consolidating, all right? And we've been rejecting 2 times, so we have a mature range. So we can now decently show up what range structure we're probably facing. We can clearly see that this is probably a triangle as resistance are contracting, all right, and supports are contracting as well. So we put those trend line and you wait, all right. So for now, did we break this one down? Maybe, but remember that a triangle builds itself out of those 2 trend lines. So if we build a bottom in here, this is what you build, all right. So let's do this. And actually, you know what? We should even do that with a triangle structure. So let's put this in perspective. So we've got an apex in here. Oh, how does that work? Come here. All right. So we're going to do this just to be able to see. I don't know if I can put an alert on that shit. Oh, no, we can. All right. So we're going to use those trend lines, and I'm going to put an alert on them. Anytime we get to break those trend lines, on spur close, crossing up. So just want to be alerted when these things get crossed. Crossing down. All right, so if they do get out of this triangle, we'll have something to talk about. But as for now, we might be building a bottom in here, and just have a look at the momentums. The daily momentum is far lower than the previous low. We're still trading far higher than that. So either the momentum is anticipating, and we're going to break this down, but even if that happens, all right, does that even change anything? No, it's just that instead of having a triangle, we're probably just going to have an ABC correction. All right, as long as we maintain the prices over this low, this is just consolidation of the previous impulse, and the structure remains bullish. So I tend to believe Ethereum is lagging, but in a daily, weekly perspective, it still has far better odds to produce more gains than the Bitcoins. And in terms of relative gains, that doesn't mean Ethereum will just reach out to crazy fucking highs. All it says instead is that in a percentage basis, Ethereum should produce more gains. But we already figured it out. I mean, going to the 14.6 requires a 73% rise in Ethereum prices, where in Bitcoins, out of the breakout area, it was just requiring what we're already probably reaching out to, which is 35. So definitely more gains in a relative perspective to do in Ethereum. It is just we're lagging with this. For now, they're rising both with the same pace, but the targets doesn't have nearly the same profits if they're going to reach out to. So we'll see. I think the first initiating move is profiting Bitcoins. And as far as Bitcoin holds, I see no reasons for Ethereum to retract, and I see absolutely no reason for Ethereum not to catch up on its late stage timing later on, as Ethereum is being speculative, and it's definitely, I think, going to do the Wave 5 extended structure, which means it's going to reach out to the target at the very late stages of the bullish impulse structure. So lagging because of speculating, and probably as long as we are in a bullish cycle, shouldn't be worried, because the profits will probably come at the end of this scenario, because that's how cryptos tend to do in these goddamn structures. You can see the Wave 5 is where you get to the target. So just imagine the comparison. We would just be there right now in Ethereum in a price structure leading us to the 280. So if you're getting the hell out in here, yes, probably there's going to be a consolidation, but do you really want to sell your Bitcoins in here? Unless you do buy them afterwards, and in that perspective, I'm absolutely okay. But I would say anyway, then just 25% profit taken in here to buy at lower prices afterwards and manage the risk in between. But I would say don't get the hell out right now. It doesn't make any sense to me. This is what I'm targeting, all right? I'm targeting in this area. Why the fuck would I just get the hell out? We didn't even made a fifth of what I expect in terms of Ethereum's return. All right, now cryptos aside, let's talk about the stock market. We're supposed to do intraday trades right now, but there's obviously a lot more interesting things to talk about when it comes to cryptos. I've been silent with them for way too long, and now that something happens, I definitely have to talk to you about. Let's put in perspective. We're going to use German index, or we're going to do German index on the right, on the left, and US on the right. So still the same stupid old things. We're trying to contextualize in here. So this is what we have. All right, we're trading the high volume nodes in the future cash in the futures market, and it's been recreating yesterday's top. We can try to go a little bit higher, as we do have an HV and cage on the cash sector slightly higher in here. So I'm going to go straight to the point in here. I've been going into a far longer explanation in the Euro version, in the French version of this show, and I don't want to make an hour-long video in here as well, so I'm going to go straight to the conclusion. I think right now intraday trading isn't possible for many, many reasons. Some people will say the opposite, will say we've got far less volatility, so it isn't possible to swing trade. But I think, first of all, I think volatility is back in the game pretty shortly. It's going to be pretty shortly. The problem is volatility doesn't necessarily mean the VIX rising. We could have volatility in prices, because when prices are rising significantly higher, you can have rising volatility as well. It just means the tensions are rising. And we know that we're getting closer and closer to the actual deal. And what I'm fearing right now is the fact that we know that the Trump administration is doing anything it can to manipulate the market, call that fake news or however this is. They truly know that by using vocabulary purposes, they can manipulate investors' perception of risks. So what they do is they orientate investors against problems. So they do anything they can to put them into riskier assets, which is great danger, obviously, because if it goes wrong, then they'll have to suffer subsequent losses. And more volatile losses. So they do play this game in the short term, hoping everything will be right, but they've been overbuying this deal. So now we know that the worst is just to price it in as a bad deal, because the deal isn't what we were expecting. So what we may expect in the forthcoming day is the final attempt from the White House to do anything they can to just push prices higher one more time. And how can they do that? They must have to talk about the specific things the market wants to hear, which means the intellectual property part of that deal. They have to reveal anything the market doesn't know already. And if they do this, then we'll have nothing else to price in this but disappointment. So if they do this dangerous game, which means selling it before it's actually signed up, and I very well expect that they will, because they're stupidly doing that kind of stuff. They're doing short-term profits out of stock market because they need support. The administration, the Trump administration, is acting because of the market. They're doing market-dependent politics, which is great danger because they're just relating their future in politics to pricings in the stock market. Therefore, they have to do everything they can to support prices, but we all know that this is not their problems. We're having to price in problems that are in place for decades, the growth problems, the cyclical problems. Politics can do anything about that. They can't do. Trump has been trying anything it could with its tax plan, but all it's been creating is an overheating economy for a couple quarters. It's just been delaying what is probably inevitable at some point. What breathes in has to breathe out, and it's just normal to have economic cycles. So if we're picking up in the US, as we're picking up everywhere else worldwide, then how do you think the US will avoid that? They won't. They just have to take it because that's how it is, and there is no other choices. So Trump administration may try it out, and they got them try hard with some manners that might be disputable, because normally the White House is not supposed to fake news or anything like that. They're not supposed to lie. They're not supposed to manipulate market behaviors, but they do. So that's the new paradigm. Now we think that the stock market is politically orientated in a short term. So we have a Trump kind of market. It's stupid, it's volatile, and it's not going to last long. So this is exactly what I think it is. So I'm speculating bearish. I could be right, I could be wrong. Future will tell once again. All I can tell is that those structures that we've been highlighting on those charts, the daily context, are just volatile and stupid. We've got this short-term bubble on the DAX in a divergent wedge structure in which we're breaking support and resistances. So we just don't know anywhere to go. We don't have absolutely no clue. So there's nothing to read out of this market because it's just stupid. So we have low liquidity, low volume on all the equity on the equity assets, meaning that the market is on expectative behavior. We're waiting for something to happen, and therefore the investors are just waiting for the direction to trade. This direction is probably going to be bearish, so they're waiting for a bearish trade. They're waiting, and in the meantime, we've got crazy fucking high number of speculators with crazy leverage raising parabolic and dangerous structures. So it generally doesn't end well, but still, there is uncertainty, and some people will wait for that uncertainty to be flushed out. They wait for the trading signal. They wait for the bearish weekly engulfing structure or something like that. Maybe this is what's going to come next week. A weekly bearish engulfing structure. I very well tend to believe it. It is highly probable. We'll see about that. So the problem is White House can be trying to manipulate the market, as the timing is definitely the kind of timing they've been putting this kind of stuff in motion previously. They know about speculative timing, and they know that if they want to influence the market, this is the perfect moment to do it. And it is just, I don't know, because once again, these are psychological patterns and definitely not technical patterns. All I can see is I see technical weaknesses in the short term. And generally, anytime it's been happening, happening. The Trump administrations have been doing anything they could to just manipulate short-term prices to put sentiment in the market, because people have a look at the candles, what they behave, and manipulating the market on day one will still have implication in day plus 100, because what we're doing, even if it's short term, even if it's stupid, even if it has low volume, we're still doing it, and it's printed on the charts. And what we're doing right now will have further consequences in the future. And obviously what they're thinking at the White House is that, okay, we might be manipulating the market, it's not good, we might have to pay for this in the future, which means we might have to suffer bearish volatility. But if we can still make the market rising a little bit today, it's still rising. So it is day-to-day basis kind of manipulation, even if we know that we're going to have to pay the prices in the long run. All they do is hoping it will hold until the elections. How stupid that is. They better hope it will hold, because if it doesn't, they're going to have to pay for subsequent volatility. So it's been manipulating pricings, and I stand for this. It's a pure manipulation. So people will say it's normal, and the market is constantly manipulated by decision makers in the market, and I very well stand for this. That's true. The market is just manipulated by bulls and bears each and every time. It's a battle, but it isn't normally the political role to deal with it. Normally, politicals shouldn't be taking over the market. They shouldn't even be talking about the Fed. This is the Fed's problem. All right? Normally, the political implications of market is not political. It's supposed to be independent. It is supposed to be the Fed. So right now we've got the Fed, who's been under political pressure and has been surrendering to political pressures. So meaning that right now politicals are making market pricings, which is great danger. Moreover, when it's the goddamn Trump that is in command, which is great danger. I don't want the market to look like Trump. We know this guy is a fake, and I don't want the market to be fake. If we have a fake market, we'll just have no market afterwards. So I don't want the market to fail. I don't want the market to disappear. I most likely want the market to react rationally again, fuck up this guy, and return to normality. I mean, that means a recession, and then new investments and new economic cycle, and we just roll it all over again like we usually do. So hoping that the new paradigm will break us out of those previous boundaries we had. Some people think it is the case, so they're betting on this new paradigm. I strongly invite you not to, because, I mean, the past has been here to prove that any time the new paradigm was trying to set itself, it always failed, and we always had recessions afterwards. So just once again, pricing that we have a reverse yield curve. Yes, we do have a golden cross, but so many times the golden cross is a fake signal that just precedes a huge drop in prices. So all I would say is that we're more about ranges. All we know is that we're searching for the range boundary for quite some time. I personally have been significantly pushed to my limits, speculatively searching for that range boundary, knowing that I started speculating on trends, got totally proven wrong. Then I started focusing on range, but the range is now switching to absolutely neutral range. So I don't know what the hell this is, but I just think all those prices in here are absolutely not viable prices. For another reason that you know about, which is this. This is my usual chart. So we got SPX in black and the ETF's volume in blue. So it is buying ETF volume getting into ETF minus the volume getting out of ETFs, people selling their ETFs, plus the unchanged volume. So this is basically the current market expositions to ETF market. Current investors' exposition to ETF market. And as you can see, the numbers are really stunning. And it is astonishing to see that no one is even reacting to this because we have a strong divergence in here, and it suggests the worst is here to come. So I'm going to just show you those numbers and explaining what they mean. Okay, so first of all, what they mean in here is that if you take the previous bottom in here, right, so the beginning of that year's bottom, the S&P has been rising 22% in straight line. Obviously, that's stupid. Many people question this rally, and me included, of course. And I'm fighting this rally actively since this market top, and I'm just holding this as a risk management. As for now, I think this is stupid. But now let me show you how deeply stupid this is. So in the same time as the 20% stupid move we have on the SPX is starting to dampening, which means we're losing momentum in here. That doesn't mean we're not going to regain it, but we need something to regain it, something extra out of technicals. We need something fundamental to break up and regain strength. So I don't think that deal is that thing, because that deal isn't even going to surprise the market. It's already in prices, I think, at some point. So we might have an attempt, some kind of a short-term burst, a bullish capitulation, trying to rise another 1% before falling like a knife. I think that's possible, but I think anyway it's not going to last long. And we're already pricing in the stupid areas in here, which I think is the limit for us to get up to. All right, we tested in 2883 yesterday. It's been rejecting. I see absolutely no reason to go higher. All right, so we'll see about that. But anyway, that's short term. So 22% straight line rising, no consolidation. You know how stupid this is. And look at how the retail traders, EDF investors have been behaving in the same time. 80% rising in interest volume. So they've been more than approximately or nearly doubled their interest into ETF, which is once again passive investment, the worst ever kind of investment when the market is topping up, and it's generally a sign that the market is topping up, by the way, when people unaware of the risks are buying bulk assets. They're buying it all because they think it's going to rise, and they're doing passive investment when the professionals are doing stock picking and market rotations. They're rotating to safer assets before dumping it all. That's what happens in every fucking late stage cycle. Professionals are rotating, which means indices prices are not yet falling, but yet they're switching to low risk assets. They've been getting out of tech sectors, selling their shits to whoever was stupid enough to buy that, and guess who bought? The same old bulk trader who just buys it all, loaded up with Apple shares and everything like that in their stock, in their ETF, and they're just hoping everything will be fine. It won't. It will probably won't, because next time they'll dump it all, which means the Apple will crashing. All the big names will just fall like knives because there's no hope for those trades anymore. And those guys will just have to suffer the losses. But they've been betting hard in this, which means for just a quarter, the volume in ETF nearly fucking doubled. And that's crazy significantly harassing, because it doesn't even fit normality, which means people who don't know the risks are betting 4 times more than the actual market. And we see a broad market in here, which means this is the S&P 500, is the broad-based indexed. Moreover, they have been putting 20% on top of the previous highs, so they've been rising interest 20% higher to their current market top expositions, as the stock market itself is still pricing 2% lower. So there is a huge divergence in here. Those guys are betting that everything will be fine, that we're going to go historical highs, that they're going to get shit ton of money, and that the market will surge again into a speculative bubble. I don't think they do. I don't think it will happen. I'm most likely even speculating against that. That doesn't mean I can be proven wrong. And if I am, I'm just going to lose, like I said. It's probably going to be a huge loss, a 15 to 20% loss. And I never ever took something like that in my entire trading history, but it may happen. Oh yes, it already happened, but it happened years ago when I was starting, and since then it never happened, such a drawdown. It can happen, but if it happens, I'm going to lose what, 20%? I'm definitely come up for that later on some other assets. But if those guys lose, they're probably going to lose way more than that. They'll lose 40, 50% of their assets. Not to say some people would even lose it entirely. So the problem is this. These guys are betting. These guys are taking high freaking level of risks. I hope this is not going to be reversing in the forthcoming days and weeks, because if it does, those guys will start selling and they'll keep on pushing to rise to the lower. What we can see is that when you see alerts, alarms, these guys are not getting out. In here they should have been worried, but they didn't. They kept on piling volumes into the ETFs. It's just when market gets irrationally bearish, when we start panicking to the downside, that those guys are selling. And this is because those guys are selling that we're panicking. So imagine how freaking high they will surrender if things are about to panic. Because imagine that if this is what's about to come for the SPX, all right? There's the famous pullback, and then the market surrenders. What do you think this will look like? They will do this, All right, they'll range. All right, they're ranging here, and when the panic will show up, this is where they'll just straight line sell. So when we'll start panicking, these guys will even more selling, accelerating the downside movement. So I told you that these guys will cause accelerated and increased volatility to the downside if the market reverses. And I stand it if the market reverses. I'm not playing God. I'm not saying the market will obviously reverse. I'm saying if it does, you have to be accounting that this will be irrationally, stupidly panicking trading afterwards because of those guys taking high level of risk, not even knowing how to manage risk. All right, so as so far it remains speculative, as so far we do have problems with the White House. Don't be too aggressive, because if White House is manipulating the markets in the short run, you definitely don't want to be among those who will pay for this. So intraday doesn't seem to be an option to me because of this problem with the White House could be trying to manipulate, because the timing is just perfectly fitting what they usually stand for. Low liquid, hesitating, low volatile. They'll try anything they can to work it out at this moment. So we'll see about that. Anyway, volatility has been finally showing a bullish engulfing structure, suggesting if the White House doesn't fuck up this timing, we might have surging volatility in the forthcoming days. But I still stand. Normally we should get back to work, because that's what I was expecting, a bullish engulfing in volatility with a daily candle close to make sure that we're dealt with that shit. But still, I see the underlying problem with the White House and the fact that we are getting closer to this deal, and they might just try to communicate to influence and manipulate the market in the short term. So that aside, how deep can that move in prices? I tend to suggest that this is where we can go, and this is an approximate 1% move out of current prices, which means if you're doing intraday trades, you got to put a 1.5% stop loss, which is very big, it's huge for intraday trades. You have to put your stop losses at least in here, and I really say it's at least. You should put your stop in here, 29.14. All right, even on intraday, because you must have to suffer some stupid pricing manipulated by the White House. So putting a stop loss in here means that you have to profit accordingly. You have to profit take accordingly. So it means your profit taking is in here. This is not possible to do in an intraday basis, which means I think intraday trades right now are not viable because of this, because of the expected underlying volatility that is problematic. I think these are the boundaries that must be traded in the forthcoming days and hours. So you might want to put your stop loss further away from the price that could be traded, and you must target those areas. But definitely, we need something to go there. And I think that's going to be the NFP or something like that. But we need something to push prices there. And I don't really think we'll have it until tomorrow. So anyway, I think today there's nothing to do but just waiting for tomorrow. All right? So we might have a dead day today, kind of a sideways action, unless we've got some White House catalysts or anything like that. If we have nothing, we're probably just going to have to wait for the NFP tomorrow. So today, I think it's way too dangerous to go intraday. I most likely want to guys being warned about the risks. If you do trade, then be aware that your stop losses must be set there, and therefore targets must be further away as well. All right, that's it for today. So no intraday, high level of risk, making sure that we've got some strong reactivation in the volatility sector, but there is still some room for a final fuck-up move done by the White House. Right? It's been happening in the past. It's been happening several times. It could happen today as well, because we have all the context for the White House to just try anything they can to push prices higher one more time. If they do, it's going to be divergence to the SPX, which means this is what we may see. All right, prices doing something like that. I see this as very likely, but it needs a catalyst. It means that some White House guys may be opening its mouth, or even Trump himself, and I don't want to be the guy who's been stopped by Trump because of that stupid manipulation. All right, so I'm not buying, I'm not selling, I'm doing nothing right now in the stock market, because I think short-term volatility is way too dangerous, and I don't want to be caught at the final move the market will make to the upside. And I suggest you shouldn't as well. Focus on the swing trades. And normally, if you're swing trading, you should be in this spot with me already. And if you are, then don't even pile up selling entries. Don't add more entries to narrow your stop loss. Just let it as far as possible and let it go with that shit until it breaks down. All right? So bye guys. Tomorrow we'll do the podcast later than the usual time scale. I'll wait for the NFP to be released. So probably by the end of the day I'll make you the swing closes videos, but not in the morning. So don't be surprised if tomorrow's video is not there when you wake up. It will come later on.